Welcome to our annual Fredeen Lecture. My name is Marc-Andre Pigeon, or Marc-Andre Pigeon. I am the director of the Canadian Centre for Study of Co-operatives. And before we begin, I want to take a moment to acknowledge that, of course, we at the Centre come to you today from Treaty 6 territory. This is the traditional land of the Cree, the Saulteaux, the Dene, Dakota, Lakota, Nakota, and the Métis. We've had some snowy weather here, and I'm grateful for that snowy weather. It feels like nature is reasserting herself in some difficult times, and it's comforting for me. And I want to acknowledge or reaffirm our commitment to the work of shared stewardship of this land, and the work of reconciliation between us as individuals and the Indigenous communities, but also the universities and the cooperative sector, and the reconciliation and stewardship responsibilities there as well. Before we hear from our speaker, I want to say a few words about this talk and the Fredeen Scholarship. This scholarship and this talk are in honor of Hartley and Margaret Fredeen and their long-standing commitment to cooperatives. And the family was greatly influenced by growing up in and this is in quotes, a pioneering community where cooperation meant not only a way of life, but a necessary condition of life. And it's when I read that, it's easy to kind of see how important that is, and how I think it's going to become ever more important as we move forward. And so the family wanted to honor that sentiment, that tradition, and also Hartley and Margaret's close ties to the University of Saskatchewan. They're both graduates of the University of Saskatchewan. Hartley and Margaret were also awarded the University of Saskatchewan's Alumni Award for Achievement in 1997. And then since 2004, the Fredeen family has supported this scholarship so that graduate students at the University of Saskatchewan can pursue research on cooperatives. And as I was kind of hinting at a moment ago, I think in a time of great division, as some of our recent electoral outcomes suggest, I think this is where cooperation and cooperatives really need to shine and will shine. So I can think of no better legacy for the Fredeen family than to support this scholarship. I also want to note that this money is really important for our students. It really makes a big difference in their lives, and really grateful for that. So with that, I'd like to introduce and acknowledge a couple of members of the Fredeen family are with us today, and that's Ken and Art. If you can just wave, Ken and Art, and then I'm going to ask Stan to make sure you have your mics unmuted and pass the baton to you. I think, Ken, maybe you want to start, say a few words, and then Art can come in as well.
Sure. Thank you. I think you can hear me. I see the yellow square around my face here. I actually come to you from Treaty 6 as well. I'm in Saskatoon visiting my mother, our mother, who's 100 years young and not far from here. So we set up camp in the family home. And I'm lucky to be here in winter because I love winter. Art joins me from Toronto, I think, Art, and I think that's an artificial background you have on your screen there. Art was a professor at University of Northern British Columbia, and my brother Al, who's here as well from Truro, Nova Scotia, might be joining us a little bit later. Yeah. He was a professor at Dalhousie for many years, so we have strong connections across the country, but particularly in this province at the University of Saskatchewan. Our parents were strong supporters of the cooperative movement here in Saskatchewan. I could go on that. Both in terms of socialized medicine and also cooperatives such as the credit union and other movements, but in particular the small cooperatives, the economic model that really was an alternative to capitalism that I think allowed people to participate and to share together in what they did. And I think that was a critical part of how we were, I think, Art brought up. And so to set up a scholarship at the cooperative college, I think was just something that was natural to who we were as a family, and something we will support in the future as well. Extremely important. And I think your point, Marc-Andre, in these times, even more so, it's important to understand how economies work and where the cooperative model works in that economic model to create an alternative to what's there. And it's really about survival at the end of the day. That's that important. So this work is extremely important. It's about research. It's not just about Saskatchewan. It's about how you create here in the province of Saskatchewan something that allows people from around the world to do research that is important they can take back to their countries and the places where they live. So it's an honor for us to be associated with you and the work that you're doing. And I'd just like to say thank you. And Eylin, I'm really excited to hear about your project and your work as well. Art, did you want to say a few words? I know you're a man of few words, but
well, sometimes. Yeah, I'm really interested in today's talk because one thing you didn't mention was the credit union, which opened. I think there was a Royal Bank that initially I think Mom and Dad used because there weren't any convenient, or at least, credit unions at that time. And when the university credit union started up, of course, we all got accounts there, and I've still enjoy the credit union here in Toronto that I've taken up with. So Meridian, which the Meridian, they call themselves a bank, but they are a credit union. So, and they've been very successful in Toronto. So I've been really impressed with that. Anyway, looking forward to your talk, Eylin, and thanks, Ken, for leading off.
Fantastic. Thank you to both of you for sharing your thoughts and your contributions. So this afternoon's talk, just a couple of formalities. We're going to ask you to mute yourself and maybe turn your camera off for the duration of the presentation. And once we get to the question and answer portion of the event, you can kind of put your camera back on. If you do have any questions during the talk or the question and answer period, please submit them to me using Zoom's chat function. I'll call on you to unmute yourself and turn on your video if you haven't already when it's your turn to ask questions. If you have any technical difficulties, please message Stan Yu via Zoom's chat function. Again, Stan, I'm going to ask you to wave to folks. I'm hoping they can see you.
Hi, everyone.
Somehow. All right. Look, it gives me great pleasure to welcome our speakers today. I think Ken mentioned international. Well, Eylin's actually from Cuba, so there you go. We've hit check that box, and she is the recipient of last year's Fredeen Scholarship. The way this works here is we award the scholarship, and while the students are in the course of their research and studies, and then the year after, they do a talk where they share the results of their findings. And so that's what you're going to get from Eylin today. Just a bit about Eylin, apart from the fact that she's from Cuba, she was enrolled in a master's in industrial engineering at the National Polytechnic Institute in Mexico. And it was there that she got her first taste of cooperatives. In fact, that's what I think incented her to reach out to us and to me and to the University of Saskatchewan and about like how can she pursue this this journey of learning about and studying cooperatives. And I love that Eylin brings this kind of industrial engineering mindset to her work. She's very, very detail oriented, very process oriented. It's been a great joy to work with her. And I'm happy to announce that, and this is our objective always when we award these awards, is Eylin passed her thesis defense last weekend and is now a load off of her shoulders. I think it's going to be a lot of fun for her to share her thoughts, her findings today. And we're all very happy for her and proud of her as well. I should add that Eylin's been, and we're going to be sad to see her go because she's been like a core part of our team at the center for the last couple of years, where she's been working as a research assistant. She's also served as a research assistant for the Canadian Association for Studies in Co-operation. So I go to the class conferences now, and there's Eylin. She's there too. And it's a great opportunity for her to kind of share her research findings as well. So like I say, today's talk is going to leverage Eylin's training in her Master's of Public Policy program. It looks at credit unions and how they've had to wrestle with this kind of very understudied part of literature on cooperatives. Is how do they engage with this advocacy versus policymaking with respect to Farm Credit Canada, which is a federally owned Crown institution that's headquartered in Saskatchewan, in Regina, and have a big presence in this province. So that's enough for me. I'm going to pass it over to you, Eylin, and looking forward to the talk.
Thank you, Marc-Andre, for that introduction. And well, just let me share my screen here. Before I start, thank you for the heads up. Thank you for thumbs up. So before I start, I want to say thank you everyone for joining me today, and especially thank you to the Fredeen family for their commitment to continue funding this scholarship and for fund researchers like me who wants to deep dive into what's happening in the co-op and credit unions world. So to start, I would like to kind of present my topic today. It's the analysis of government relations between credit unions and Farm Credit Canada. And as I mentioned, as Marc-Andre just mentioned, yeah, I defended my thesis last week, so this is kind of really fun to get the opportunity to share my findings and my research with others. And the agenda of today is kind of the background, like why does this topic matters, and my research question, methodology, just briefly, and mostly my talk today will be on focusing on the findings, what periods and the nature of that relationship during those periods, and some elements are impacting that relationship, and more deeply into both of credit unions, government relations, and lastly, some implications for couple of implications for credit unions. So starting with why does this topic matter? First, I have three main elements. First is the importance of credit unions. Credit unions play like a really important role in the economy, especially in rural communities. They are mostly the only physical banking presence in rural community, and they foster local development and employment. The second element, there's been questions of whether a level playing field exists in this agricultural lending, especially in the light of credit unions' relationship with Farm Credit Canada. And what the guiding principles of Crown corporations said is like they are allowed to compete with private sector, but they should be subject to the same regulatory requirements as the private sector. So unlike banks or credit unions who are under the office of the Superintendent of Financial Institutions, OSFI, are under OSFI regulation, FCC or Farm Credit is not. And there are been other kind of questions of why FCC has no complementary mandate, unlike Business Development Bank of Canada. And those kind of questions has been also reflected in the steep growth in market share on FCC. While credit unions have grown from 2.8 billion to 21.4 in the last 30 years, which is more or less 7 times, FCC has grown its market share about 12 times, and banks just 5 times. So that's kind of the other kind of major component of why does this matter. Credit unions have been expressing some concerns. And the third, there's limited understanding of credit union government relations. Some of the research that has been done has dated back 30 years back. So there's a kind of need for understanding some government relations on the credit union side, because most of that research was focused on cooperatives, but not so much on the credit unions. And I already kind of explained about the importance of credit unions in the economy. And despite that importance and that significance, there's no research. So my research question is, how can we understand the relationship between credit unions and Farm Credit Canada over the last 50 years? That's the period that I explored, and the impact this relationship has had on credit unions' government relations, namely policy advocacy and policy making. In doing that, I can explore some main concepts such as credit unions dynamics, crown corporation dynamics, and some periods of time of changes that I will mention later on, policy advocacy and policy making, more or less, or those are the main concepts. And my methodology was a qualitative case study. I follow Eisenhardt and Jean, kind of to create this knowledge on, and I rely on 4 phases for this study: preparatory, which I include my research question that I just mentioned, and some propositions that I would mention later on. And my data collection mostly relied on FCC annual reports and interviews from both sides, credit unions and Farm Credit Canada. That analysis was mostly some coding and triangulation of sources. And well, my report, which is my thesis, that's, I hope it's about to finalized. And just getting into the most important part of the presentation, which is the findings. While exploring these kind of research questions, I found 5 main periods of time. I'm just presenting 4 of them right now, but I will later on present the 5th one. The first period, it's from around 1969 to 1992, where FCC was considered a lender of last resort, and couple of the interviewees from the credit union's side mentioned how they experience in the marketplace FCC has been a lender of last resort. They try to do a deal with a member. If it didn't work, then members would go to FCC. The financial crisis in the 80s really affected FCC, and they kind of started to change. And by 1987, they kind of were no longer like their directives have considered that they were lending to really high risk clients, and that had been really costly for the organization, for the institutions, and they can no longer be a lender of last resort. And by 89, as I just mentioned, they stated that they can no longer be a lender of last resort. And from an external perspective, most crown corporations experienced on the late 80s, 90s, this corporatization process, because it was kind of there was some restructure that some crown corporations were privatized and others started to corporate size their practices, mimicking more of the commercial lending on the kind of private sector. There's no evidence of advocacy or policy making in this first period, and there's more of a complementary kind of role between there, although it's not formal, it's more of a complementary, because mostly FCC had this lender of last resort approach. At the end of this period, and that's where things started to shift. But the beginning of the second period, there's shift towards pro-competition. There's a mandate change in 93 that allowed FCC to start to compete with the private sector, and they start to position themselves as being Canada's first choice for agricultural finance. Although there's some evidence that there's kind of the first collaboration between both institutions, credit unions and Farm Credit Canada, through the CU lease agreement, where they would lease equipment to farmers. That's kind of the first collaboration. Most of the major theme of this period, its government relation is this nascent advocacy, where by 1996, trade unions, banks, and FCC met on the Standing Senate Committee on Banking, Trade, and Commerce, and FCC was pursuing expansion in their mandate. They believed that they could serve more rural communities, and banks and credit unions were worried about this kind of expansion in FCC mandates, especially credit unions, because they said, and they shared at the standing committee in '86, that FCC had started to go into some of the markets that they were already serving. So despite of the committee proposing that FCC and BDC should merge, and that credit unions should kind of keep these FCC should keep this main crown corporation rule kind of complementing the private sector. By the third period, and in 2001, FCC again expanded their mandate, and they went to beyond traditional agricultural lending. This is a period of increased competition, and there's a substantial growth in their market share from 16.5 to 28.5 in 2010. And as annual reports of FCC also show, the corporation had become in an extremely successful financial institution. They had gone through this transformation from lender of last resort to an institution that was really competing for market share. And as credit unions credit union participant that I interviewed mentioned, they were perceived, like FCC was perceived as really aggressive in the market share. So the more aggressive kind of FCC became, the more credit unions pursue some advocacy, and that's kind of the main government relation that is over this third period. And going into, I will later on talk about policy advocacy on the credit union side, but for now they had kind of three main expected outcomes. By the end or the beginning of the fourth period, which is competition and the creation of the liaison committee, they got one of those expected outcomes that I will later on mention. So by 2011, there was the foundation of the creation of the FCC Credit Union Liaison Committee. They were told to come together and work and build these partnerships so FCC could support the private sector. And even though the liaison committee was created, credit unions and the Canadian Credit Union Association continued to lobby because they thought they had this idea that credit unions were struggling to hold on their book of business, and because of mostly FCC competition. So that lobby continued until around early 2020, around COVID started, and mostly because credit unions participants mentioned that CCUA and the Canadian Banker Association were lobbying for a mandate review for FCC, and they weren't getting anywhere. So I think this kind of approach towards lobbying kind of pivot to a more collaborative relationship. I will talk later on as well about this. So in short, this fourth period, there's some policy making which is done through the committee. That's the piece of that kind of relationship, and ongoing policy advocacy from the credit union side. I mentioned before that I would talk about the elements, some of the elements impacting the relationship. First is geography. There's different or divisions between East and West and rural and urban. So I think I should mention this before. FCC and credit unions relationship develop on a one-on-one basis. So while some rural credit unions may be more inclined to collaboration, others urban may not, or the other way around. I'm not setting one specific example. It's just like the relationship fluctuates from one credit union to the other. There's more competition here in the prairies because one of the studies that I consulted mentioned that credit unions here in the prairies are more profitable than maybe in British Columbia or Ontario, where there are more membership, but there's less profit in the agricultural sector. So it would depend where the credit union is placed or located to kind of have an impact on how that relationship with FCC evolves. There's the second element is the local relationship and mutual trust, and these two were mentioned from both sides, FCC and credit unions. They put really kind of strong. They were really mentioning this on how that local relationship impacts the whole relationship of the credit unions, mostly because of that individual credit union leadership, what's their willingness to get involved with FCC, and whether FCC's action in the past, because there has been a long history between both institutions, they're being perceived as predatory. That would kind of say where there's more or less willingness to collaborate. And then another elements are the resources, small versus large credit unions. Some small credit unions may be more willing to participate and collaborate with FCC because they may not have the whole amount to provide deals to farmers, and then by collaborating or co-lending with FCC, they would be able to share that risk. Maybe other large credit union may not see as much as interest in collaboration. It could be as well the other way around. Some small credit unions may be really strong and in ag lending, agricultural lending, and may not want to collaborate, where maybe large credit unions may not have some skills on ag lending developed, and then maybe could be willing to collaborate with FCC. But it would mostly depend on how much resources they have at that time. And then there's perceptions from both sides. FCC perceives credit unions not as much collaborative as they would have expected, and they see that credit unions compete with each other, and that is kind of complicates how they get into that relationship with credit unions. And also this credit unions works in a decentralized, independent way, and building that one-on-one relationship with credit unions is takes time, and what FCC are usually the way they usually approach to a relationship, it's in a way of banks where there's a headquarters and different branches and all the information goes down, but that's not the way credit unions work, and there's some perception of that as an impediment of creating more relationship, because it would take more effort on the FCC side to build those one-on-one relationship, where credit unions may perceive FCC as having an unfair advantage because they have lower administrative costs. And as I mentioned before, there has been this long, complicated relationship between both institutions, and also because there has been questions of whether FCC is fulfilling their role as a crown corporation. And going into the policy advocacy side, I was just mentioning that I would talk about this. So the main or overarching objective of credit union was to establish a better competitive balance between FCC and credit unions. There were three main outcomes that credit unions were expecting out of this ongoing lobbying. Was regular revisions of FCC mandate, adding a complementary mandate of FCC as Business Development Bank of Canada has, and increase farm credit partnership with the private sector. In doing that, they lobbied members of parliament, they government officials, they did some information campaigning, doing research on the role of FCC. And as I mentioned before, they were really long. It was a long-term policy advocacy strategy. And at some point, and these strategies demand or require really resources that are limited. And at some point, there's no, those are resources that have been demanded. There's no getting the objective that credit unions were expecting, and not all credit unions participate in agricultural lending. And so as the time passed, the support kind of decreased, and at some point they, as I mentioned before, pivot into a more collaborative kind of approach to the relationship with FCC. Mostly, and as I mentioned earlier, that this was kind of, out of the three outcomes, there was one which is increasing FCC partnership with private sector, and it was kind of being achieved through the liaison committee. And so that leads to policymaking and the fifth period that I mentioned before, which has been developing and evolving from 2022 to present. There's still competition. Farm Credit Canada and credit unions remain competitors. They both know it. They are aware of that. But there has been some changes in the Farm Credit leadership team. There's what I perceive from credit unions is there's more commitment from both sides to try to make this liaison committee work. And this is kind of the policy making piece of that relationship, because it's because credit unions and FCC, they meet and they do four main activities: co-lending, loan referral, joint education events, and relationship building. And this kind of, I've created this kind of policy network where they have targets and they have a joint work plan, an annual joint work plan, then they have tried to have alignment and accountability on the goals they share through their liaison committee. And as I mentioned, the changes in FCC leadership has been perceived as a genuine intent to collaborate as much as possible. So there's the idea around this new period is that they will try to make this liaison committee as much as possible, not that much in the previous period from 2011 to 2021, where the liaison committee existed, but maybe wasn't working as much as it could. So in summarizing these 5 periods, from period one, which there's no advocacy, no policy making, no government relations, to this increased competition where there's some starting to advocacy, some aggressive advocacy, and some policy making through a liaison committee and ongoing policy advocacy, and later on to this last period strongly on this policy making. I relied on NVivo, which is a qualitative tool. I coded the interviews from participants from Farm Credit Canada and credit unions, and information as well from the Farm Credit Canada annual reports, where there were mentioned on both kind of policy advocacy and policy making, and there's an increase of that during the period third period and fourth period, which I mentioned here in the table, mostly on the fourth one, and there's an increase in the participation in policy making. The codes that the phrases that I extracted and the codes, that is an indication there's more policymaking participation from credit unions in this last period. And I mentioned this before, which is the case study propositions that I wanted to kind of share now. When I started study, I mostly relied on the papers of Fulton and Laycock on 1990, and what they shared on the study is that cooperatives could do both kind of as pressure groups could do both kind of government relations, policy advocacy, and policy making, but they would most likely go to the policy advocacy side. And following that idea, I thought at the beginning of the study that if cooperatives, credit unions would go or would be able to or would compete with FCC, it would more likely kind of lead to a more policy advocacy kind of government relation, because they would have to defend their members' interest. And on the other side, if there's room for collaboration, they would more likely do some policy making work, because there's room for working together, both organizations. So again, I used in vivo to code or all the information, and what I got is there's more intersection between a pro-competitive, where the two organizations compete, and credit unions doing policy advocacy, and this more complementary nature where both institutions are able to work together, and that could lead to more policy making kind of government relation. So again, a competitive relationship may lead to credit unions advocacy strategies and activities, and a complementary one could lead to the two institutions engaging in policymaking activities, working together, as I explained through the liaison committee. And going again through the findings and more of the link to my proposition or the study for Fulton and Laycock, they kind of explain that there's these drawbacks from doing both kind of government relations, policy advocacy and policy making at the same time. And what I summary from those studies was that there's this, and also saw through that, so through this research, is like there's member heterogeneity, which could be from geographical location, urban versus rural that I just mentioned, east, west, the size of the credit union, small versus large, or the industry, the focus on the industry, which could be agriculture or not. Not all credit unions do agricultural lending. So that different kind of membership could lead to conflicting viewpoints on certain policy issues, and therefore it's more easily to get consensus on high-level policies and policy issues than on a specific ones. And that was the example of the FCC lobbying efforts, which kind of stop why that advocacy efforts stopped at some point. There are these kind of conflicting viewpoints on the members are kind of also intertwined with these limited resources, which the Canadian Credit Union Association have to deal with, and they have to at some point decide what kind of government relation they're going to pursue. In the context of FCC and credit union relationship, they went from advocacy to more policy making approach right now, and that is based on that or having or not aggregating members and having that membership cohesion, and when there's not there's could lead to some principal agent problems, because of the CCWA or the top organization has to decide what strategy or government relations strategy pursue, and it may leave out some members, and it may not align with what all members would like to do. So that also be a conflicting point between both kind of relationship. There's a public policy environment. Most credit union participants mentioned that there's a idea of there's perception of these big five banks, where there's bank has really significant influence over government, and sometimes where there's some policies changes, credit unions are not as considered for those changes. And the fourth idea is policy bias towards efficient policy delivery. As I mentioned, when I talked about the perceptions of FCC towards credit union, they would prefer to have this centralized hierarchical organization like banks, where you have headquarters and different branches, and it's more easily communication and relationship built in, because it's everyone would go into the same umbrella. But with credit unions, they have these one-on-one kind of relationship, and that could be perceived as less agile and less bit more complicated to do government relations with, especially policy making. And last, I think I haven't mentioned this, but and I apologize for that, but there's been some ebbs and flows in the relationship. There has been from no relationship at all in the first period to some on the second, but not that formally and not that ongoing relationship. There's a third period where it's really fractured, and credit unions would have this more kind of aggressive advocacy, and FCC would have more aggressive competition. So that relationship has ebbs and flows, and credit unions has mentioned that in most of the interviews, and it would be impacted by how there's more or less competition, more or less complementary or collaboration. Second, there's a deployment of both type of government relations in these last 50 years. And I guess there are two practical implications, and these practical implications come from one question that I was asked at CASC event this year, is what can credit unions do in terms of building a relationship? It's FCC mentioned there's a importance, highly important, in building that relationship at the local level. And what another thing that I comment that I received for credit unions is that the decisions in the liaison committee should be communicated to local stakeholders. So there's a need for or develop it better. I don't know how to maybe just frame it, but the local stakeholders who are building that local relationship with FCC need to be aware of, be communicated what is being decided and at the liaison committee, those goals and yeah, for like having for avoiding or try to avoid those policy implementation failures. Well, I guess that's all from me.
Okay.
It's been a
Fantastic.
lot.
No, thank you, Eylin. We'll open it up to questions, but I might start with one, just to use my chair prerogative. Eylin, and maybe this wasn't clear for people. Can you really be clear? What do you mean by policymaking versus advocacy? As the people wouldn't have had the benefit of reading your thesis. Can you just explain those concepts and just start us there?
Well, policy advocacy, it's mostly on those lobby efforts that credit unions has done. They built this strategy that lasted almost a decade, and they wanted these three main outcomes, expected outcomes that I mentioned before. They started lobbying the parliament, and they kind of built those relationships with, sorry.
Yeah, but that's an outside in, right? It's outside. I think that's I was kind of hoping you could just make that difference a little clearer. Less about the substance of what they were lobbying, but more about what the differences between those two forms of government relations are.
Yes, there's some yeah, that outside piece is how credit unions are trying to get into that that policy arena and try to lobby for their interests and their members' interests, and that come from the outside of that policy arena, I would call. And then that policy making brings more inside one-on-one in terms of both institutions trying to work together. If that was the questions, I'm not sure.
Yeah, that's right. Yeah, externals, you're making noise. You're trying to get at the political space, and then the policymaking is internal. You're sitting down at the table with people, and that's very different forms of engagement.
Yeah, doing a joint work plan and trying to make all that plan work throughout the year, and with those goals that they both set and yeah, making that work.
Okay, let's open it up here for questions. Please just raise your hand. If I can see you, maybe Stan can alert me too if somebody's got their hand up. In case I missed somebody. Oh, there, Murray has his hand up. I was hoping Murray would ask a question. Go ahead, Murray. You might be muted. There you go.
Yeah, thanks. Eylin, nice work. I've been looking forward to hearing what you have to say. So this is good. I think you've maybe touched upon something here to think about how these advocacy roles versus policy-making roles might interact with the type of environment that the co-ops are in. And can you say something about what there was a transition that occurred? What went on? Can you describe anything that went on within the apex organization of the credit unions, within the credit unions themselves, as they made that transition? Because that they went from as I understand it, they went from an advocacy to a policy-making role. What did they have to do? Did they have to reorganize? I guess what I'm getting at is this. I think will not be sort of neutral to how the organization and the credit unions are themselves organized. So, do you have any information on what happened in that transition?
Well, I may not have that deep understanding, but what I think or what I understood from my research is that well, a few things. One, trade unions dynamics are changing. They're merging. So that's not the same scenario now that they had 10 years ago. Second, not all trade unions do agricultural lending. So I guess maybe all those merging as well. Not all are in the agricultural lending space, and they kind of put resources into the Canadian Credit Union Association to lobby and work on policymaking roles on their behalf. And not all credit unions, as they are not all involved in agricultural lending, were really interested in keep pursuing this advocacy strategy. Again, the resources are limited, and not having this membership cohesion of all wanted to pursue advocacy advocacy strategy also kind of impacted that shift. And I think some relationships started to develop on a good note with FCC, and what I received is that they didn't want to risk that relationship that they were building as well. So I think over time, it wasn't not only, changes in credit unions dynamics, changes or limited resources, or not all members be agreeing on having or pursuing a lobby, but also having that FCC leadership change. They've mentioned that have helped to build that relationship. Having someone who is willing to lead FCC towards having those relationships built had also been an important piece for the credit unions.
If I may, just a quick follow-up. That's fascinating. You've just listed, I think, factors that are really important. You've got, in effect, what you've said is that the ag co-ops kind of coalesce together. There is less heterogeneity in some ways. There were changes going on in the larger lending environment. FCC had changed. All of these would suggest. So here's something just to think about. All of these would suggest that you might then see a transformation from advocacy to policymaking. Maybe it's those factors rather than the competitive versus the complementary that are really at work, or that they're at least working in conjunction with each other. So I think there is something to your argument that in a competitive world, you need to behave differently than you do in a pro-complementary world. But you also have to, I think, take account of the very factors that you very, very nicely outlined and say, those are also pointing in the direction of a change that may have been driving something that perhaps then the change in the nature of the competition accelerated in other ways. So there's some real, in short, there's some real richness here to your results that I think is great. So thank you.
Sure. I just think I want to add that it's really, and I guess it's complicated to put everything under one kind of explanation, because there's so many, even if they're merging, there's still many credit unions, and each credit union has a different kind of relationship with FCC or Farm Credit Canada. So what would work or may be the case of certain credit union may not be the same in another. So putting all kind of that information and relationship under, one major theme, it's kind of also complicated. There's not only one explanation for this.
No, and another very good point.
Thank you, Maria. I see a question in chat, but I want to make sure Art or Ken, do you guys have do one of you have a question? I know this might not be your bread and butter day to day, but if you have any question, curiosity that you want to explore here with Eylin before we get too close to the hour, and you don't have to. I just want to make sure you have the opportunity to weigh in.
Maybe just one quick question.
Go ahead, Art.
Eylin, you kind of focused on this relationships between Farm Credit Canada and the credit unions. What about the banks? So the banks seem to have a larger role to play in loans to at the agricultural sector. What is it, a three-way conversation, or is it more just a two-way conversation?
Well, for the scope of my research is a two-way conversation, but for the sake of understanding all this whole phenomenon, I would say banks should be included, even the Ministry of Agriculture. More actors should be included to this conversation, but it wasn't my my focus on this research. And I had the pleasure to kind of talk to one of the credit unions participants. He had a long career in the banks, and I kind of had some perspective on how banks kind of navigated that that changes, but it wasn't my the focus of my research. So that's why I don't have anything to say about bank.
Yeah, fair enough.
Thank you,
Yeah.
Art.
Thank you.
Okay, just before people start wrapping up, we have one question from Tiana I want to get to really quickly. I also want to note that kind of the big, so what question here is if a government organization is, and Eylin alluded to this, is driving credit unions out of business, and that's obviously threatening to some smaller communities where they depend on that credit union for services. Okay, Tian asked a question here. There are now 3 federal regulated credit unions out there, and the question for you, Eylin, is: does becoming a federally regulated credit union provide a better avenue for them to kind of get involved in the policymaking kind of space? Does that change the dynamic as well? Like we talked about these factors with Murray. Is this another factor that might be explaining things? What some of your findings? And have you had a chance to talk to any federally regulated credit unions?
No, I don't think so.
No. Okay.
Because I try to focus on participants on the liaison committee to try to understand this kind of policymaking side of things that hasn't been explored before. And I may have, well, I for the scope and everything, couldn't maybe not talk to everyone that is involved in agriculture. But I guess there's so many things that could change after this talk that yeah, I just maybe on the federal side I would say that yeah, they have a larger scope. They are national, and then FCC is also national. So I would say that it would be good, or that would be a different dynamic, I would say so.
Yeah, very good. We have, maybe I'm gonna squeak in one really quickly. Greg and Sarah Polar. I don't know if you're any relation to Dion Polar, but I'm gonna throw this out at you. Can you put your question succinctly and unmute yourself, please? If you're still there. Greg and Sarah, you might be muted.
Sorry about that. Just one real quick question. I just know from your research there that the market share for FCC has been oscillating in around that 30% for the past few years. So I was just wondering if you get any sense that this desire to collaborate from FCC with the credit unions is more from that is the comfort level of where their market share is in relation to the ag market. Because certainly, 100% market share sounds good on the surface, but could be an additional risk there for a bank or a credit union or FCC in that case. So I'm wondering if it's coming, that desire to collaborate and the gains that have been made, or more from just a comfort level of where that market share is at versus a desire to actually be in a pro-collaborative world.
What a great question. Eylin, have you thought about that?
Well, not that much, I think so. I don't think so, but what I could say, and what I could say it's like when they built, like founded the liaison committee, that kind of relationship was more on mandated, that from the willingness of both parts to, you know, work together. I think that has changed. I think that there's more willingness to collaborate. I don't think it's always easy, and it's always, you know, change it from one credit union to the other. I don't know if on the FCC side is because they are more comfortable now with their market share. I couldn't say.
It's a good question, though. I feel like, wow, we should have had that in your interview interview guide. Listen, I'm going to have to call it. I saw a couple more questions. I'm so sorry. You can follow up with me directly, or Eylin, if you can get our contact information. Maybe you can pop your contact information in the chat, Eylin, if people want to follow up with you. And I'm just going to wrap up. So thank you so much, Eylin, for this talk. Thank you all for joining us. I just want to flag a couple of things before I let you go. Next year's Fredeen Scholar is Candice Minot. Candice is actually in the process of, like where Eylin was last year, she's working on her PhD, or sorry, Master's of Public Policy paper. And she's looking at, it's another credit union thematic, which is kind of my area, so that's why. But she's looking at whether we're seeing evidence of credit unions aligning themselves with the Truth and Reconciliation calls to action, particularly number 92, which kind of asks organizations to kind of get with it on that issue, and then these UNDRIP principles around that. Really interesting study that I think people are going to find fun to hear about when we learn more about her results. She's a wonderful candidate for, I think, the Fredeen Scholarship. So just watch for that next year. I just want to also flag that we are having a McPherson talk. Our annual McPherson talk is on December 5th from 4 to 5:30 p.m. And a provocative question is being posed by Dr. Joseph Heath from the University of Toronto. And that is from his book, Cooperation and Social Justice. And the question is, are cooperatives more virtuous than other types of corporations? It's going to be fun to hear the answer to that question. And that's one last thing. I'm going to mention that next week we have our co-op conversation, our monthly co-op conversation. And we're going to feature Dr. Raphael Ziegler from HEC Montreal, which is the leading business school in Quebec. His talk is going to look at the connection between cooperatives and the circular economy. The circular economy is a model of production and consumption which involves sharing, reusing, repairing, refurbishing, and recycling material and products for their whole life cycle, right? So very minimal waste is the idea. And where do cooperatives fit in that concept? That's what Raphael is going to share with us. That'll be a real treat too. So thank you all for joining us again today. Thank you, Eylin, for a great talk and engaging conversation. We hope to see you at our future talks. Have a great rest of your day, everyone.